What are we going to do between now and Wednesday? A Fed rate decision. We all know what's going to happen, but what's the guidance going to be? Light earnings week. We got some news. We got some major analyst ratings to talk about. We got some offerings. We got the S&P ads, and we have a special guest host on PreMarket Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We're starting out on the good side. S&P's up about 10 handles, 68.88, inching our way to new all-time highs. Let's call the dollar futures flat at 98.98. TLT. Don't tell the TLT that interest rates are going down. Down 12 cents at 88.10. USO in the red by a $1.04, 70.88. GLD and SLV, well, they're both up. GLD up a little bit more, 66 cents at 387.10. Silver trying to stay green here, 52.82. That makes it down about 13 cents. In Bitcoin, the Bitcoin rally continues up $2,530. Can it clear the double top on the futures at 94,500? Okay, I promised a special guest host today. No pressure. Everyone be nice to Jim Tassoni, CEO, Armor Wealth Strategies. And my first question, is it as cold on your side of the state as it is on my side of the state?
I would have to say the answer to that question is 100% yes. I'm staring out my office window behind the screen here. There is way too much snow out here for early December. It's 8 degrees as I speak here right now. So we are in full winter mode, and the sad part is we're probably going to be here for 4 or 5 months more. So I guess I'll hunker down and spend some time with you. Excited to be on the other side of the mic today.
All right, we won't go. We'll go into the natty gas futures and the UNG a little bit later in the show. See if there's any anticipatory buying in that. Broad outlook here on the markets. I mean, average daily ranges are coming down. We're itching up to close to all-time highs, and a lot of the indexes here. You've been maintaining that bullish stance after that little bearish move in April or May, but what steers the boat from here?
Yeah, I mean, heading into the end of the year, I know when I was on a couple of weeks ago, we had gotten a little more cautious, taken some of our higher beta positions off the table, but continued to hold that relatively bullish stance. And starting the beginning of last week, it's been, again, another up and to the right rally. Nothing seems to be able to keep this market down. We seem to want to rally into the end of the year. I've got a good prognosis for the first quarter of 2026. Beyond that, it's a little more cloudy for me. But right now, to your point, I'm looking at my charts, and I had kind of on the SPY anyway, I had 685.70 as sort of the top end of my range that we needed to clear to take another leg higher. We've cleared that. We're moving above it pre-market here. And so I think it's, for now anyway, if you're a trend trader and you want to be bullish this market, I don't see any reason to hold you back.
Yeah, for sure. What about if old Pumpin' Powell, if he comes out, he gives you that quarter rate cut and says, I'm not sure about 2026. I'm not sure if I'm going once, twice, 3 times, lady. None at all. I mean, is the market already priced in what Jerome Powell's going to say on Wednesday?
Well, I think to an extent, and I think also what the market is priced in is the fact that Jerome Powell's grip and or ability to move markets is going to be diminishing more and more as we move into 2026. I mean, he's out in, I think it's May. He comes off in some as the chair in, I believe it's February, and I may have those dates turned around. But point being, I think the market is pricing in the idea that Trump will get his guy, whether it's Hassett, Bessent, whoever ends up in that seat is going to be more loyal to Trump and therefore more loyal to continuing to goose the stock market via lower rates and continued, I guess I would call it, quasi easing. And so I think that from that standpoint, Powell's ability to jawbone this market is probably becoming less and less as we move through the next, several meetings.
Yeah, that's an excellent point. So be honest with me. Okay. At 5:15 on Friday, you were at your keyboard, you were gripping, you were waiting for the S&P ads, and you were waiting for SoFi. But SoFi doesn't get in. Before we go to the individual stocks and the price action, Jim, do you really care about S&P ads and deletions?
I mean, from my standpoint and the way I trade, it's kind of a non-event. I know guys like Dennis and other traders make a ton of money and are very good trading around the additions and deletions. But for me, it's essentially a non-factor. I mean, if the stocks via momentum and or the fundamental quant screens that I run come through based on any of the movements that come off of this, that's fine. But I think we all know statistics show, right, that stocks that are added versus stocks that are deleted. I mean, you're better off buying the stocks that are deleted over the next 12 months than most of the time you are buying the stocks that are added. So that's been historically proven out over, a 1 year time frame following these type of things. For me, it's essentially a non-event. I want to own stocks for other reasons outside of being added or deleted to the S&P 500.
Yeah, and you're right. I mean, there's a lot of long-term and short-term implications. We were speculating in the STN room on Friday and SoFi and the firm, and some people mentioned Carvana. I'll tell you one thing: no one mentioned Fix or CR8. So real quick, I'll just break down the price action. Of course, these stocks get a pop. They're getting added on December 22nd. So, if you have strategies to play that going into the, to the actual ad date, go ahead, use them. The initial reaction high, as you always get in things like this, was ridiculous. Traded up to 450. We've tracked $12 back from that. Wow, this is blowing away the all-time high here. All-time high is 413. Is this correct? Yeah. So, boy, oh boy, if you want to play this thing off the hop to the long side, you better look for a bid off that opening bell. Big old gap to fill down to 408.19. Will that be filled? Well, I won't say today, maybe not tomorrow, but over the longer course of time, these events end up a fade. I mean, I can remember, I think the trade. I mean, you just can go back. The trade desk, several other stocks. They get the pop. Sometimes they hold up for a while. Moving on to the other two here, and it's so funny because we had a longtime listener, Mark Roberson, hop in the chat on Friday, and he asked about this stock, Comfort Systems. And I'm like, what? I'm like, well, the chart looks pretty good. If you have an opinion on this one, Jim, I'll be surprised. But anything on Comfort Systems?
So from a fundamental standpoint, the answer would be no. I don't really follow this stock. I pulled it up on my charting tools to put it through kind of my momentum algorithm. And yeah, this has been a behemoth. I mean, I wish the chat and or you had turned me on to this back maybe in early September when it started to break out, because that's sort of what I'm seeing here is a breakout back from early September. I think, here you are trading above $1,000. I mean, if I'm just looking at my levels, I think you got to hold above 982 You might want to look for some back and fill here. And if you want to lean against that, I think that's an area that if we stay above that, you're good. We get back below that, and I think you're going to get into some more choppy action. So that's what I'm looking at. Honestly, though, overbought, oversold. It was very overbought. It's come back down. It's not in that hugely overbought area. So maybe compared to like, what Carvana that you showed before that had just had a face ripper since last Monday, I think you may be able to stay long this name just looking at the very limited technical information that I have, just pulling it up right now.
Do you, with your portfolio management and your individual trading, do you care about the price of a stock? A 4-digit stock like this, as far as liquidity. I mean, I know it's not probably not the greatest day trading vehicle. Do you have any filters or anything that, like, I'm not trading over 500, 400, or when you're, you could just trade a smaller position? Does these high prices make any difference to you?
To me, no. But again, I'm not a day trader. I'm not trying to flip in and out of these things in a couple minutes or a couple hours. I mean, my typical trade is going to last anywhere from a few months to maybe even a few years, depending on the portfolio. And we manage several different ones for kind of our shortest term models. I'd call it like our swing trading models. Those are usually 1 to 3 month holds. So we're not looking at, penny stocks or micro cap stocks in that model, but something like this, there's definitely enough liquidity in a stock like this that, like, to your point, we would just trade fewer shares. We can move in and out of this thing without being too big of a problem. I wish we were running a fund the size that we were going to push this thing around, but I think on our meager means, we'll be okay here.
All right, the final one, CRH, busting out here. Former all-time high was 121.99. This one's trading a little bit closer to the pre-market high of 128.98, so maybe you do get some more follow through on this one. Just trying to see the volume. This trades decent volume, and it's going to trade some decent volume today. So, there's your S&P additions.
Yeah, and it's funny with all these stocks. I'm just looking, and they all followed a similar pattern. And I'm not trying to insinuate anything here, but when I look at my shorter term levels, they all started to break out and show, I guess I would say, bullish signals. And I wasn't following. I don't own any of these. I wasn't following any of them. I wish I had. But and this is probably, you may say, duh, the entire market did this, Jim. But last Monday, Tuesday, these all flipped where if I had been looking at these and they had passed some of my more fundamental screens, those would have they all broke out in my technical view last Monday and Tuesday. So they were signaling this. The opportunity was there. Unfortunately, like I said, there's only so much time and so many stocks you can follow. But there were some signals here to take a look at these. So hopefully some of you in the chat and some of you out there got into these because there's been some momentum ahead of these announcements.
So we talk about CEO changes in the C-suite, implications from them. Sorry, a lot of times it doesn't mean anything, right? But there is a significant change going on here at Berkshire Hathaway. Yeah. And Todd Combs, who's been Warren's kind of right-hand man, right, for running the portfolios and over at Geico, a big presence over at the Geico. He's headed over to JP Morgan. Changes in the C-suite at Berkshire Hathaway.
Yeah, it's a really interesting development, if for nothing else, just conversationally. I mean, you talked about that Todd was, Warren's right-hand man, right? And he was supposedly the guy who was pulling the trigger on the majority of these trades. You heard that all the time now. Like, he was the guy who was in charge. He was running Geico. Yes, he wasn't going to be the CEO of Berkshire, and maybe that was an impetus for some of this move. Jamie Dimon got his guy. I mean, I know that JP Morgan's got, a succession plan in place for Dimon, but with him coming over, does that sort of throw that into flux? Is there some chatter behind the scenes for that? So I have no idea what the package looks like. I really don't even know what his role at JP Morgan is going to be. It's probably, I'm sure people in the chat know, but it's a really interesting move because obviously Warren Buffett's a legend, but we have to be honest with ourselves. I mean, he's 95, 96 years old. I mean, as great as he is, he can't go on forever. They're putting succession plans in place, but I have to believe this is a pretty big blow to their long-term plans. Again, we don't have all the insight into whether this was something that had been discussed behind the scenes or whether this blindsided the Berkshire team, but it's definitely a very interesting development from my standpoint. And we'll see if if Berkshire goes out and finds somebody to fill that void, or if they just say we're going to ride with the team we got. So,
Berkshire's an interesting stock. I've been, we all been following the price actions since, Warren made his plans to step down from the top spot. And the stock got hit. I mean, there was the Warren Buffett premium in that stock, and they took it down. It had a nice haircut. I'm looking at the monthly. I'm looking at the bottom right chart, and I know it overtook half of that move. So you got the 50% retracement. I don't know if I'm quite ready to do a projection, another down move like it had from 540. Let's just call it 90 points, from this area. But I think for the shorter term, and you can weigh in with your technicals, I mean, you have a converging 50-day and 200-day. Now, that's down around both around 496, 497 area. I would see how it reacts to that because it spent a lot of time below that. It spent some time. It's been a real struggle for the stock. Any technicals sticking out to you in Berkshire Hathaway?
Yeah, so for me on Berkshire, I see, I mean, it's actually gotten definitely bearish. It's funny because it's sort of this nice hedged play that you have in the markets, where when the market started to move higher beginning of last week and took the majority of stocks with it, we actually saw at that point Berkshire start to lose some momentum and start trading lower. And it's right near an area, depending on how you like to trade, whether you're kind of a momentum or a mean reversion type trader. For me, 498.50 is a level that I would be watching. If we hit that, bounce and hold and move higher, that might be an area you could lean against to try a long shot here. Conversely, if it breaks that, I think you could see a move lower. So for me, I mean, just based on the technicals I'm looking at, it's more of a bearish than a bullish setup. I would be leaning more towards, I don't necessarily know that I would short this name. It's just not a real exciting short for me, but I think it would be a no touch for me at these levels. I don't really see a lot of excitement to get involved. And I don't see, the momentum there at this point after a nice pop and run that we had, in early November.
All right. So the AI story, right? I mean, everyone's following the AI story. Couple weeks now. Actually, I'll throw my chart back up here. Google, the new leader in AI, just right after Warren buys it too, and has a tremendous run, consolidating near the high of the move, right? Market looking good too. So basic technical analysis would say, hey, strong move up, consolidation, another move higher. But this week, OpenAI is expected to unveil a new reasoning model this week that it claims will outperform Gemini 3. before you know, and we could talk about the related stocks, our Google stocks, the AVGO and whatnot. Meta was kind of tied to it as well. First of all, Jim, do you make use of AI?
I actually do more and more every day. Now, I am by no means a guru or an expert when it comes to AI related things. I will be the first one to admit that. But I have found that it has made my life exponentially easier in a lot of ways. One, in helping me to write more coherently. So I'll take my ideas, I'll throw them in there and maybe look for some ways to enhance some of my writing to our clients and investors. And then also from a research standpoint. Now, I will say, and I've probably had more experience with ChatGPT than Gemini in full disclosure, but I use it sort of, I'll say almost as like I guess a first-year analyst, if you're a portfolio manager. When I was a portfolio manager with my bigger firms, we had younger analysts that work with us. And you would task them with certain things, but you knew the information you would get back would always have to be double-checked. You never trusted anything that a first-year analyst gave you. And I treat AI the same way. It can crunch a lot of data and give me a lot of information over a very short period of time. But I treat it like I would treat a new analyst. I've got to verify all that information because there have been numerous times where it has spit back information just like a first-year analyst would, with all the bluster and confidence that you would expect from a 22-year-old. But it just is inherently and fundamentally wrong what it's spitting out. So I'm a believer long term. I think it's getting better. And just in the brief time that I've been using it, I've seen leaps and bounds improvement in the data I'm receiving. But I still don't think anyone should go out there and build a strategy based solely on the output that's coming from any of these sources.
So you use junior analysts as contrary indicators, Jim?
Not really contrary indicators. I use them more as they work their butts off. They give you a lot of information, but I trust it about as far as I can throw them. And I remembered, and the reason I say that is because I started as an analyst at Morgan Stanley. And I remember the type of information I would give to my bosses and walk in there with all the confidence in the world, only to have them point something out that destroyed my thesis and made me think, oh my God, everything I just said was wrong, even though I came in here with all the confidence in the world spewing it out. So that's the same way I treat this. It's not necessarily that it's wrong or it's a contrarian indicator. It's just more that it needs to be fact checked. It needs to be verified by somebody who's actually maybe has a little bit either less hair or gray hair. Take your pick.
Well, yeah, I fall into the gray hair category. Do you have is there a particular stock that sticks out to you? Is there a particular incident where you went in and you kind of got your wings clipped a little bit?
Oh gosh, back in the analyst days, yeah. So there was, and some of you may remember, and this is dating myself a little bit because this is back in the early 2000s. Remember Cisco, the CSCO version, which was the darling of the tech boom. I mean, this was one of those stocks that couldn't miss. And so me, having just come off reading The Intelligent Investor and being this Warren Buffett, I'm going to find these great value stocks and I'm going to do discounted cash flow work. And so Cisco had kind of just muddled along. I think this was 2003 or 2004. So it had come off, it had come off its highs. It was trading lower. And I'm like, okay, look at where this stock was. Look at the opportunity that you had here. This thing was amazing at one point. It's still going to be the greatest stock and you can get it at such a value here and such a bargain. And my original boss at that time, he looked at me and he said, he taught me about falling knives and why you don't want to catch a falling knife. And I said, okay, we'll see. I'm smarter than you. I know what I'm doing. I've been doing this for 3 months, all the stuff that goes on with the hubris of youth. And so I bought it and I put it in my portfolio. And I saw him, I don't know, 10 or 12 years later. And it was after I had moved on. I had moved from Morgan Stanley to UBS and then other positions. But he chided me and he said, yeah, I'm pretty sure, after, and again, this was, the market had gone through, the GFC, but it had started to come out. This is probably 2014, 2015 timeframe. And we had started to make some gains there, had clawed our way back. Things were looking okay. And I think at the time, and I don't have the exact dates, but he kept receipts. And he told me that the Cisco was trading like 20% below where I had recommended it like 14 years earlier. And so it might have been hands down the worst stock call, or one of the worst stock calls you could make, at least on a stock that didn't go belly up over that time frame. And so that was just one where, again, you've got a lot of information there. You think you know everything, but it doesn't always work out. So he had the experience to know to avoid it, and I didn't.
Don't frown, average down, man. You could have just kept on buying. You just can't sell at a loss. Now, you were right, Jim. If you see that guy at a cocktail party, you can say, you see, I'm a long.
That's the thing, right? It's like real estate. I tell people that all the time. Stocks and real estate. If you just keep doubling down on I'm a long-term investor, most of the time, eventually you'll be right. So.
They're not making more land. I'll tell you that right now. Moving on here, we have a special guest coming on here at 8:35. You all know Mish Schneider, Chief Market Strategist at MarketGauge. She's going to be giving us her insights for the remainder of the year and also into 2026. It's a Monday, Jim, so you know what happens on Monday? Merger Monday. And, we got a merger here. Confluent, Class A common stock here, going to be acquired by IBM at I think $31 a share. The street looks pretty confident that this deal is going to go through. Got to 30.81. That's not giving really any time premium here. I guess the only investment advice I could give would be at this point would be don't pay over 31. And also, now I don't know. I mean, maybe another bidder's coming in here. I don't know, but it seems to be holding the premium here, Jim. Confluent, any thoughts on Confluent or IBM?
I mean, Confluent, not a name that I follow regularly or know very well. I mean, again, it was another one of these stocks that started to show some bullish technicals early last week, like 95% of the market. So probably difficult to pick out unless you were, already in the name or following it more closely than I was. It's not something I would touch here. I mean, to your point, I think the majority, I'm not a merger arb guy. Majority of the premium seems to be out of the name. Upside versus downside just doesn't do it for me. So I'd probably, stay away at this point. IBM, I mean, this is another stock that, we had that dip down on October 23rd, and then the rip higher on Friday, October 24th. And we've sort of just been middling around here, a little bit higher, a little bit lower since, the 1st of November or late October, looking at my charts. And, we've held that 288 level and bounced off it. Now we're trading significantly above it. if you want to use 288 as sort of your line in the sand, you can stay long against that area. 298.50 is sort of a pivot level for me too. So I think those would be two areas. I would probably play this from the long side as opposed to the short or the outside. But those would be areas I'd be looking at, 298.50 and 288 to lean against if you do want to play along.
Yeah, Jim brings in the low of the move here. I'll just note for our investors out there, you had a significant decline from that all-time high. By the way, this was earnings price action. This was an earnings reversal back then on the 23rd and 24th. I'll just be looking at this 307 area. That's very significant to me. You had the retracement right up. That's right around the 50%. Acquiring, I don't know how big this is as part of their cash flow, but trading in the red. For me, IBM, it's your safe AI play. They've been doing it, Watson for like 50 years now. They should be a little bit farther ahead, but to me, it's important for this to regain that 50% retracement area. Talking about Monday trades, just going real quickly here. I know that Dennis likes the XBI long over the weekend. I don't know if there's any big deals or any positive developments, but if you from the STN room, if you were trading that over the weekend, Biotech day, XBI trading up very significantly here, 1.44%. Or excuse me, $1.44. That's over 1%, and you have the market up but fractionally. So a big winner there in the XBI. You can drill down on the individual components for that. We'll do one more thing, and then we'll go to our special guest, Mish Schneider. About to sneeze here. So what happens when you have a stock and they're kind of in the doghouse, but then they try and rally, and this is really a significant rally here. But CoreWeave intends to offer $2 billion aggregate principal amount convertible senior notes due in 2031. We did touch, quickly on the this sector, but CoreWeave here. Any place in Jim Tassone portfolio?
Yeah, the funny thing is we actually did buy this in our short-term swing trading stock portfolio on Thursday. So this is a name that we bought on the open on Thursday. And so we're long this name from about 79 and a quarter. We've got to stop. If we have a daily close below 76, we're going to be out of this. So we've got a pretty short leash on this. It's our minimum, what I call starter position. But so far it's worked out for us. We saw, we saw that huge dip lower, and then we saw some stabilization, some consolidation, and then we moved above that 70. We closed above that 76.16 level for us, which was an indication of stabilization in what we look at. So this is the type of trade we love when we see a stock have a dip like this and then stabilize and start to move higher. So this is one that so far so good, but very, very, very early in the trade for us, having just bought it Thursday. So we'll have to see how this plays out.
Yeah, so you're not headed for the hills on this offering, right? I mean, you bought it for other reasons, correct?
Yes, we bought it just because the technicals were, showing oversold, and then we had some stabilization and a little bit of a move higher. We like kind of being able to play, like I said, against that 76 level. And again, I say it all the time, I don't get emotional about my trades. If this breaks that level and closes below it, we take our small loss and it's on to the next one.
All right, it is now 8:35. We're going to bring on a special guest, Mish Schneider, Chief Market Strategist at MarketGauge. Right. Good morning to Mish Schneider joining us here on pre-market prep.
Yeah, I'm not sure why my camera's all messed up here. You see how blurry I am?
Yeah, I thought it was just my eyes.
No.
Yeah.
Well,
I was out pretty late last night, so I'm not really sure.
Let me stop the mic.
Okay. Device is not connected. I guess, Jim, I should have said, don't worry about it. We want to hear what you have to say, but we will. Our first interruption, Jim. You rock and rolled for 10
I thought we were going to make it through. Usually I bring the technical snafus when
Beautiful.
Oh, look at that. There we go.
Mish. Okay. You're perfect.
Okay. Hi. Good morning, guys.
Yeah. Well, I want to introduce you to Jim Tassoni here, CEO Armor Wealth Strategy. So, both multi-billion-dollar money managers here on the show today. Mish, Dennis took a vacation.
Good for him.
And Brent went on vacation.
And I can't say I was on vacation, but I went to the Money Show last week. And then I went to Austin, Texas for the first time ever. We had a client meeting there. So, yeah, I'm back. Wow.
Okay.
I had a chance to move to Austin. And when I went down there during the recruiting trip, they had just experienced, I think it was 27 days in a row of 100 degrees or higher. And I just said, no, I like warm weather, but the fact that it was still 98 degrees when we left the restaurant at 11:30 at night, it was a little too hot for me. So
I get it, but it was cold when we were there. Rainy and cold, believe it or not. So, we didn't really get to experience
the Texas heat.
Or a lot of the just walking around the downtown and the whole music scene. So, but we'll go back. It's a great city. My goodness, what a wonderful city.
All right, Mish, love your longer term perspective on the markets. I know you're deep into your analysis for macro themes. I want to save the animal thing for Jim here, but macro themes here heading into the new year.
Well, I think the biggest thing, and a lot of people are expecting this, so I'm not the only one, is hard assets, right? So we've already seen an incredible move in gold and silver this year, copper, but there's a lot of assets that haven't really done what they could do, but started to show at least signs. So I think you have to keep an eye. I've been saying all energy hands on deck. So, we've obviously seen solar do well. We've seen coal do well. We've seen nuclear, and we're back into uranium. We were in it, we got out, we got back in on the most recent dip. But I also really we've had our eyes on natural gas. We've been in it really for like a long time now. But oil has, been the sleeper. And so there's still a tremendous need for oil in terms of a fuel source. So that would be a supply demand situation to watch. Some people say oil glut. Some people say that is really basically not true because the rig counts have gone down. The Permian Basin is not drilling as much. And nobody in terms of the producers want to see really cheap oil because it doesn't help them very much. So we have our eyes on that. So let's put a number on it. So I like to watch crude oil, WTI. It tried to poke its head on Friday over 60. It's coming in lower than that. I think if we get a second close today over 60, I think the writing's on the wall that may have bottomed out too. So that's number one, is the hard assets. And I'm also watching DBA and DBC. So DBC would be metals and oil. DBA would be more of the agriculturals. We did see some moves this year in corn, soybean, wheat, my dear little sugar. Has looked like it's bottomed out at around 14 cents, but it hasn't really been able to get over 15 or even 16 cents yet. I think that this is a year to do this because of a lot of the policies that are still, I think, inflationary. I'm not sure if you just want me to go on. I stopped.
No.
When I start to hear my own voice too much.
No.
No,
Yeah.
No, and Mish, I agree with you wholeheartedly. I mean, I think the commodity and the hard asset play has been a source of great returns for all of us this year that have been fortunate enough to get on that trade, and I know you have been. I love your call on oil. It's funny, I was looking at my value portfolio, and energy is currently the number one sector that I have in that portfolio, and it scares me. So to have somebody with your background and credibility say that they like that space at least calms me down a little bit in terms of, having a portfolio full of, I'm looking, I've got Schlumberger, I've got EOG, I've got Chevron, Exxon, ConocoPhillips, all those are positions in my portfolio. So I hope you're right. To that effect, and Joel brought it up earlier, and I'd like to talk to you a little. I found it interesting that you do the year of a certain animal. And so why don't you go ahead and tell us, first of all, what your animal was for 2025, how that worked out, and then unveil kind of what your animal for the next year is.
Well, I've been doing this, Jim, for a long, long time, like probably at least 13 years now. And I follow the work. I have to give credit where credit is due to Raymond Lowe, who is basically, they consider him a feng shui master, but he writes an extensive report every year on predictions, not just based on whatever the animal totem is for the Chinese astrology, but also for the actual elements, which would be water, fire, wood, earth, etc. And so this coming out of the snake, which I think this year really has sort of metaphorically seemed like a snake, right? We've coiled, we've hissed, we've contracted, and then we've, kind of shot forward. And now we're going into the year of the horse. And the year of the horse, let's think again of metaphorically, what does a horse do? It gallops, then it stops and it bucks when it gets spooked. So that means volatility. So I think we can look forward to some volatility this year. And we can certainly come up with a bunch of fundamental reasons, not the least of which would be the midterm elections coming up. And then, but also the geopolitical situation. If we're looking at hard assets, what happens with inflation, what happens with the Fed and interest rates, and the whole changing of the guard there. I mean, we can go on and on and on. But the other more interesting thing about this year is that for the last 5 years, we've been in an element of water. And even though a lot of industries will do well in water element, the overall prosperity, global prosperity is under pressure in water, and we're returning to fire, right? So generally that means that there will be a lot more global prosperity. So we could look out at some more emerging markets. It could be a good year for China, not that they've had a bad year, but even a better year. Supposedly gold does even better in the years of fire. So I have a whole list of stuff. They're saying financials and banks could do very well. Travel could heat up. So, there's more, but that gives you sort of the essence of it. Now, do I live and die by the sword of this? No, but I do find it A, super amusing. B, I always say, there's a lot of Asians in the world. So if you're talking about 2 billion people and collectively believe the same thing, that's powerful. And it's just a lot of fun. And I'm born the year of the horse, by the way. So,
yeah. Talking about things, for 2026 that could change our perspective on the markets, our long and short-term views. Rates, right? And with a Fed meeting coming up on Wednesday, a Fed rate decision. I don't know exactly where the Fed fund rate, the CME tool is, but I know it's north of 80%, so pretty much a foregone conclusion there. But what about the guidance? Like what's in store? I mean, if Pump and Powell doesn't, hey, we're going 2, 3, 4 times. I don't think that's going to be his demeanor. Talk about the rates in 2026 and the effects of the U.S. dollar.
Well, I'm glad you brought up the dollar, because I think actually, I know this is kind of bold, but hey, I kind of known for bold statements. I actually think the interest rates will matter a lot less coming into this year, because the anticipation is that the whole Federal Reserve is changing. It used to be unanimous decision. Now there's been so much contention within the Fed. And I think we're going to constantly see this sort of split decision type of stuff when it comes to the rates because of the contention in the Fed. And I'm not so sure the market really cares that much, unless, of course, something major happens, like we get, the rates really cut down low, or we start to see maybe, get going back over 5% or something like that. Then I think the market takes notice. But look what's happened this year. We really have been in sort of a range. If you look at the long bonds, or if you just want to look at it from the federal funds, essentially 3.5 has been really low, and 4.5, 4.75 has been the high. And the market hasn't really cared. I mean, right? We've been marching along in spite to new all-time highs. Now, of course, we've seen gold and we've seen silver not really care. And finally, of course, we've seen some kind of a rotation, a healthy rotation into the rest of my economic modern family. That has to keep up. That's what I would watch, number one. Number two is, I think what will be even a bigger of importance would be the dollar. And the dollar had its run up. It couldn't get through 100.5 if you're looking at DXY. It looked like it was going to break down under 99. It sort of did. It hasn't really gotten back up. If it breaks down under 98, that could be the bigger influence in terms of our whole narrative. Some things will be helped and some things will suffer. And of course, we're always looking at the consumer, number one, which has been better than we thought. But let's see what happens if the dollar debasement, I mean, I'm not the only one who likes to make expressions, continues.
Yeah, no, and I think you're exactly right, Mish. I think as far as getting things right from a macro standpoint, the dollar is where you need to look. And I appreciate you giving us those levels, because as a lot of macro strategists say, and I think it's mainly correct, you get the dollar right, you can get a lot of other things right too. So I think I think that's a situation where paying attention to the dollar, whether it be to drive your international exposure, your emerging market exposure, your hard asset exposure. I mean, these things are all going to be tied around dollar strength or weakness. And we saw that recovery rally. Now we're seeing it fade a little bit. So I think that's definitely something that we continue to want to pay attention to. Now, I know you provided in your notes some of your current portfolio holdings, and we've gone over a lot of those. A couple that I just wanted to touch on real quickly is in the healthcare space, because this was an area that we saw, with the exception of maybe, your Lillies and some of those stocks, we saw this be a laggard for a long time, and it's really started to wake up over the last few months. And I see you have some positions there. So if you wanted to touch on healthcare, how you're positioning, and what you see heading into 2026, that might be great.
Well, let's just start with the ETF. And I know some people like XBI, some people like IBB. I've always stuck with IBB only because it's just what I've consistently used. And I know you may not be familiar, Jim, but Joel is very well familiar with my economic modern family. And I call that big brother biotechnology, right? And what's so interesting about that space is that we know it's a cyclical and it's a non-cyclical. And so while we've had this incredible runs in the market over the last several years, even with the corrections, biotech hasn't participated until recently. So, we can go into all the different reasons for that, but it certainly has presented opportunities in some companies. So number one is we have to look at things that have an AI component to them, which would be separate outside of just healthcare, like, for example, Tempus, which we've been in and out of that stock also for a long time. That stock looks great if it holds over 70, and so far it is. That stock at one point this year was over 100. So I don't see any reason why that couldn't continue to go up. The other one we bought at 4. Now, we were a little bit lucky, I will say. But again, Joel, we talked about this, I think the last time I was on, was Replimune, REPL. And that was like the kind of story where the FDA can make you or break you, right? So the FDA in this case really cooperated, and they have some kind of treatments for a pancreatic cancer, which, what's so satisfying about the healthcare space is when you get something like this that can actually help mankind and then helps your portfolio. You can see it's trading over 10.5 right now. This could be an $18 stock. I mean, that's something we're looking at. And then outside of that, I mean, you're right, we're talking about the diet drugs. That's a whole different thing. Some of them, like Eli Lilly, have done great. Others are still kind of sitting around, but we like Viking Therapeutics for one right now, as something that we've been in for a while. And Teva is another one. So, this is December. We're not trying to fly into a lot of things. We've had an incredible year, mostly a thank you to silver and gold. But still, we've had a great year, even in AI, and even that's been more diversified now. We've kind of seen that rotation out. So I'm not going to push it at this point, but these are the things that I would be really looking at, particularly if we get any kind of good correction.
Let's before we let you go, Mish, let's talk about Bitcoin here, and pulled back. It's had a nice rebound here. Talk about your outlook for crypto here for Bitcoin. Really, that's it. Do you follow any other cryptocurrency besides Bitcoin?
Oh
Ethereum?
God, yes, yeah, Ethereum.
Oh, really?
Actually, Ethereum is really on my list right now because I kind of think that it looks like it's struggling to get back over the 200-day moving average. So I like those. You could see it right there. You see your chart.
Yeah.
Yeah. So I think if it gets back over the 200-day moving average, that would be a good sign. We know, of course, about Tom Lee and Bitmine and all that stuff. And, and I try to dismiss that and just keep blinders on when it comes to this. But Ethereum right now has my interest. Chainlink, it's under the 50-day moving average. I did great. And then I got chopped up a little bit on its way down recently, bought more at 13.5. But really, unless it gets back over 15, that would get back over the moving averages. I've been in Ripple forever. Every time there's a substantial dip in Ripple, I buy like under 2, which I'm in right now, and it's trading over 2. And so those are the main ones at this point that I'm following the most. But I've got eyes everywhere. I mean, I watched Solana. Again, 125 seems cheap for Solana, but it hasn't really been able to get back over 150. So I think we're going to know pretty soon. By the way, going back to Raymond Lowe, cryptocurrencies are supposed to do very well in years of fire. So we'll see.
And finally, the state of the AI trade, Mitch. Beginning early or late?
Well, in terms of, okay, so there's 2 parts of AI, right? There's the actual AI technology and the fact that it has nothing but forward going in terms of its, innovations and its impact on our lives, etc. However, there's a couple of things that have kept me sort of at least looking more at the infrastructure and at least at the most the energy sources that it requires. And that is that right now we still have a couple of things to watch with AI. Number one is obviously we know CAPEX has been huge, but we got to see those earnings continue. And how can that happen? We have to see through the consumer actually buying some things. OpenAI is the classic example of that. They were actually releasing soft porn as a way of getting some customer revenue. So that's number one. Number two is I think we have to look at not just the infrastructure, but how realistic it is to build these massive data mines that could wind up sitting like ghost towns. We don't know that yet. And there's competition from China, and I think the competition is going to continue. So it's not .com bubble-ish, but we certainly are going to see some shifts. And that's why I love the fact that we're seeing a rotation into small caps, transportation, biotechnology. And even though semiconductors don't look bad, I mean, obviously they made new all-time highs in November. That may not be the first place I would go. I mean, I love NVIDIA, but it still has to get back over 185 and hold. Mm-hmm. So, we bought a couple of other things that are in the tech space, but not necessarily, the classic ones, TTMI I gave you. So basically that's all infrastructure, tech in infrastructure. Looking at Corning, that's another one, GLW. But again, just want to see the dust settle a little bit there first.
Mish Schneider, Chief Market Strategist at MarketGauge, part of the great crew over there, along with their husband Keith and Jeff Bish, who I've been working with. And MarketGauge is going to be helping us out here in 2026. Mish, didn't even get to the Modern Family. I guess I have to do an hour interview with you. Thank you very much for joining us here on Pre-Market Prep.
Thank you, and nice to meet you, Jim. And
nice
Joel.
to meet you as well, Mish. Appreciate it.
Yeah, always great to see you, Joel. See you soon.
All right, just before I forget here, these charts are brought to you by TradeStation, right? TradeStation, chart, analyze, customize, all in one program. A lot of great tools to be using on TradeStation. We're going to be figuring those out and just showing them to you in 2026. Jim, Analyst. I don't know what the analysts were doing this weekend. They weren't really hanging out with their family very much. But we got a very notable downgrade here in a Tesla, TSLA. We all know what that is here. Morgan Stanley, they're saying, hey, all this stuff is already priced in, like all the valuation here, the stuff that they're going to get from Optimus, all priced in, trading in the red here. Jim, how much? I mean, you talked about being a junior analyst. You talked about, working and following and being one. How much, in your calculations and your trading decisions, how much of a factor do they play, analyst ratings?
For me, you want to talk about more probably of a contrarian indicator than anything, or a lagging indicator at best. I think the problem with a lot of analyst ratings, and again, having been on that side of the business, I know this all too well, is by the time you write something, get it approved, get it through compliance, get the redrafts, get everything done, I'm not saying that it's necessarily outdated. And again, I will say this was 20 plus years ago that so I'm sure it's, technology's come a long way and it's a lot quicker now, but it sure seems to me that upgrades and or downgrades tend to happen, I think post the actual news or relevant information. And so I don't put a lot of stock into analyst ratings. There's some really good analysts out there. Now, I will say that, but as a whole, I'm a much bigger believer in let's follow the fundamentals of the company, do your own research. If you're a technical person, follow the technicals, let the price action guide you. Don't get caught up in the chop that may come from an analyst upgrade or downgrade, and just kind of look through it, because ultimately I think a lot of it is either contrarian or lagging at best.
Yeah, just real quick. Boy, Tesla, it's been, it had a fantastic week last week, been on a major rally. Pulling back here, will it get? I mean, this thing just loves to play around the 50-day, holding well above the 200-day. That 50-day comes back down at 435. So if you want to fade them on this, sure, go right ahead. That's your support. You're gapping down. I'm not sure how this looks in relation to, well, right now, in relation to Friday's range here. You got resistance at a gap fill at 451.66. That's certainly not out of the realm of possibility. 455 was the close. That was the high close of the move, and that was buffeted by a 454.53 close. So double close area. Let's call it 454.75. Forget the actual high, recent high, 58.87. Also, they're talking about overweight at GM. Well, thank you. Thank you to tell me about going overweight at GM right now.
You're speaking my language here, Joel. This is what I'm talking about.
And aren't you glad that TD Cowan told you that Alta might be a good buy?
Yes. I wasn't able to decipher that myself. I needed them to tell me that at this point, but
Yep, and let's see. And I guess we can end up. There's some other ratings that we can cover on the Stock Trader Network, but where are you at in this whole Netflix Warner Brother Discovery saga?
It's going to be really interesting. And again, you can talk about, we can talk about price action, which obviously Netflix's price action has not been favorable as of late. So that's one standpoint. Something that I probably would be a no touch. You could even take a shot on the short side, although at this point, I think maybe the short thesis might be playing out a little bit. So for me, it would be more of a no touch than a short at this point. I think it's going to be really interesting to see how this merger plays out. I mean, you've got the Trump administration that's very buddy with the Ellison family, who was bidding hard for these assets. And so does that play into this at all in the decision as to whether to approve this merger or not? I think just on the face value of it, I think it would be really hard to have a cogent argument as to why you wouldn't approve this given the current media landscape. But whether or not this ends up being good for Netflix or not, I mean, I think we have a slew of companies dating all the way back to AOL when I first got into the business that attempted to buy these assets, and it's sort of it's a purchase that nobody seemed to be able to figure out in 25 years. So, Godspeed to Netflix. We'll see how it plays out, but it's going to be interesting.
The Ellison Trump angle is something that's very, that I didn't think about. Also, do you follow any of the prediction markets at all?
I do, but not on this particular issue. If I'm being honest, I follow it more on sports. And also weird esoteric type stuff that just catches my eye.
Yeah, there's a lot of interesting stuff. The reason I mentioned that PreMarket is pricing in a 20% chance that this deal goes through. And the other interesting thing about Netflix, like if you're buying Netflix on the premise that, well, if they don't do the deal, it's going to go right back up. No, that doesn't happen. They slam the stocks, and a lot of times it's hard for them to come back here. Jim, I have to give you an A+. And
maybe my first one ever in all the years of school, but thank you.
Yeah, I'm sure you got a few of those. But great prep. We love your technical analysis. Your fundamental analysis and your quant models. We can go over in the Stock Trader Network room, which Jim's going to be co-hosting with me today. But not much movement in the market here. And folks, I think that's the way it could be going into Wednesday here with that much anticipated rate decision. On a final note here, this show is brought to you by Hive Digital Technologies. Let's take a look at the Hive chart. A global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. Scan the QR code on the screen or visit the link in the description to learn more. Folks, that's it for the day. We are going to go set up the rest of the trading day, cover some movers on the Stock Trader Network. All right, Jim, thank you.
Thank you.
We'll be back with you guys tomorrow morning.